Hello my fellow freedom builders, and welcome back to the channel, and welcome to a new year 2024. We just entered and the markets are about to open in 24 minutes here as I speak. So the video today is a bit of a follow-up on the webinars I did both just before Christmas and between Christmas and New Year's Eve for those of you that are paying members of MyStockScanner. And what I want to show you is, first of all, a quick summary of some of the strategies that I showed the webinars around between Christmas and New Year's Eve. And then I am going to split this video up in two. So at some point, I'm going to say, this is it for those of you that are just free members of MyStockScanner. And then I will have a quick break and we will continue the video, and then that part will only be available for those of you that are paying members. Well, the reason for that is that until we have the strategy mixer, the portfolio mixer on the website, we are going to send out spreadsheets with the stocks that the different strategies chooses every month. So in the last part of the video, I'll actually show you what stocks that is, and I'll also send the emails out to you. But first of all, I will do a quick recap on the different strategies, what sort of performance they have been making, and I will show what kind of sectors it has been choosing, because we can actually learn something from that as well. Now, if we're looking at it, we are looking at a quality momentum, a value quality, a value momentum, which is actually an inverse value because we're looking at really bad value combined with high momentum. And we have our TPI strategy that I also showed you here in the beginning of December. Now, if we're looking at them, first of all, when I'm talking about value quality, value momentum, and so on, it is based on our rankings here on MyStockScanner. So if, for instance, we have a quality momentum strategy where we have certain rules in, we are basically looking at a weighted combination of quality and momentum. So these are the scores all of this is based upon. And then, of course, the TPI strategy, we also use the TPI chart here from the chart here as well in MyStockScanner. All right. Well, if we quickly look at the performance for these three strategies, we have the quality momentum, and the quality momentum has been doing 15.5% since the year 2000, which is absolutely decent compared to, well, right here we actually have the Qs. It should be the SPY, S&P 500, but there's not much difference there seen over 23, 24 years here. Between this and let's just have a quick look. Yeah, this is the SPY. They are almost the same. And the CAGR here for the quality momentum, the compound annual growth rate, is 15.5%. However, the drawdown is 50%, but that is hard to get around since that we are fully invested in the market all times, and the biggest drawdown is, of course, here in the financial crisis. Had some in the .com crash as well, one in the Corona crisis here, and of course we've had some tough years here in 22 and 23. However, when we're looking at the annuals, we can actually see that the strategy did fairly well in 23 with around 17%, had a rough 22 and so on. This is one of the strategies that we're looking on at today, and overall 15.5% is very decent. Then combining value and quality, meaning we both want high value and high quality. With this strategy we have been describing in the webinars, that one has been making roughly 19%, and I should say we should deduct maybe 1 to 1.5% from these numbers in trading costs. We can see here a sharp at 0.84 and a max drawdown around 48%. So if we can stomach these sort of losses when the market overall is crashing, then we can actually have a very, very decent profit. In the inverse value / momentum, we are actually going for bad bad value, meaning, and I just picked one of the stocks here, we are actually going for low value on the stock scores here. So this one counts as a 96. You should basically say 1 minus the 4. So this actually counts as a very high number, because in this specific strategy we are looking at stocks that have actually grown so fast that the value is counted as very bad. And then we are also looking at high momentum. Looking at that, and those of you that followed my webinar here, you know that we had some extra charts where we didn't count in 2003, because in 2003 it made an insane 262%. We have checked the numbers, so they are correct. We just don't think that we will get another 260 something percent again. But looking over the years, it is a very decent performer. 2022 was a rough year, but it made 31% last year, so that is very decent as well. And then the last one is the TPI strategy, which is also in the 19-20% range here, but again with a 45% max drawdown, so that is the lowest of them. Some very nice Sharpe and Sortino ratios here, where we are looking at the CAGR combined with the volatility. So overall, combining these different strategies will be very, very interesting when we get the portfolio mixer here probably in February. All right. So when we run this, and we run this strategy the first trading day every month, then let's have a look at what it actually tells us. Because the people that are expecting 2024 to be a massive crash year, and there are people out there that thinks that, I'm not included in that, because I actually have had a look at the stats over many years, and I can see that every time the market have been down 20, 25, 30%, and then have started to turn around, and we see the interest rates go down, then it is normally a very, very good year. So let's have a look at what the charts here show us. I won't be showing you the actual candidates, that is only for the paid members, but we can see that it is choosing a lot of technology and a lot of consumer cyclicals here. That is very interesting. We can also see that the stocks you would normally think would be prone for picking if we were looking into a really bad stock year, that would be healthcare, and it would be consumer defensives, but they are actually very low here. Let's see if that also goes for the value quality. Well, when looking at that, we again have the cyclicals here. We have a lot of energy. We have the consumer defensives also with a smaller part here. And we have the healthcare, which is also fairly small. So again, we see something focused on energy, on consumer cyclicals and so on. Not what you would normally see when we are going into a market where if the big ones should expect a huge crash. I'm not saying we can't see some sort of correction. That would actually be natural after the market we have seen here. But this is not what this looks like right now. Then we have the value momentum, and remember, this is the inverse value. So this is bad value and high momentum. And here we have a huge majority in the technology. That is this one here. Then we have some consumer cyclicals here, and we have industrials and financials, but no defensives at all. The last one we have, let's just see here, that is where we are primarily looking at the TPI, so a low TPI, and then we are ranking it for quality, and in this we can see a bit of consumer defensives, but then we have communication, we have technology, and we have industrials. So again, not much defensives here. So that is interesting, and it kind of builds on this idea of mine. And of course this could change quickly, because the market could crash and then everyone could go into defensives and healthcare and utilities and so on, like we normally see when people are really nervous. But this is not what it doesn't smell like a huge recession and a huge correction in the market. A correction of 5 to 8% would be something I would expect at the highest. I would not expect more of a correction than that. And then I think there will be a ton of stock buyers getting ready to jump on the dip in the market, simply because they're looking forward to lower interest rates, which will probably arrive in March. All right. So this is this for all of you that are non-paying members. I'll just for those of you that are paying members of MyStockScanner, just keep watching for 3 to 4 seconds, and I will be ready with the different candidates. For those of you that are non-paying members, thank you for your time today, and I am looking forward to showing you a lot of new material, a lot of new features in MyStockScanner in the new year. So have a very happy new year, and you'll hear again from me soon.